some of the deductions under chapter 6a, particularly related to section 80C, 80CCC, 80CCD, and then 80D. And 80C, which was available for individual and HUF, was related to some of the investment schemes or savings schemes into which if the SSC has contributed any money or deposited any money, he will be eligible for a overall maximum deduction of 1,50,000 rupees. Of course, this 1,50,000 rupees includes 80C also, CCC also, and CCD 1 also. But before them, let us quickly recapitulate what are all the various schemes which have the eligibility for 80C deduction. So definitely the life insurance premium related to the SSC himself or his family. Similarly, contribution to recognized provident fund, public provident fund or statutory provident fund or approved superannuation fund. Repayment of the housing loan. Repayment, this is not interest. So that should be related to the principal or even registration charges. So for the purchase or construction of the house, if any loan is taken and that loan is repaid, that repayment is eligible for section 80C. So we are going to be very clear about it. We are talking about repayment but not interest payment. And this loan can be taken from government or bank or LIC or any other employer. So that's okay. So in general, the question will specify whoever is the lender. And also any tuition fees paid to any university, college, school, etc. for the full-time education of the children of the SSC, that too up to a maximum of only 2 children. Any such education expenses, in other words we can call it as tuition fees, can be claimed as deduction because it is an expenditure for the SSC. Though it is not a savings scheme or investment scheme, that is also eligible for 80C. Again, term deposit is another investment opportunity or savings opportunity where a 5 years fixed deposit can be made with any scheduled bank. In fact, even with any post office also, that will be eligible for 80C. Same way, subscription to some of the notified bonds of NABARD will be eligible. Post office time deposit also will be eligible. Senior citizens savings scheme will be eligible. And contribution by the central government employee to the additional account of National Pension Scheme as referred to in 80CCD. All of them are eligible for 80C. In addition to this, some of the other things like recent ones, deposit into Sukanya Samruddhi account scheme also will be eligible for 80C. National savings certificates also will be eligible. Like this, there are many savings schemes or investment schemes which can be claimed as deduction if any amount is invested or saved by the SSC, of course subject to a maximum of 1,50,000. Same way for 80CCC, there is a separate section for particularly the annuity plan of LIC. So only for LIC's annuity plan, this 80CCC has been there. That is a pension fund actually. So that's a kind of pension scheme, but not government scheme. It is LIC scheme. If any deposit is made into that, that is also eligible for 80CCC. Of course, it is also subject to the same maximum amount of 1,50,000. There is no additional limit here that is prescribed for 80CCC. 80C, 80CCD, and 80CCD, CCC and 80CCD 1 all put together only 1,50,000 is the maximum amount of deduction that can be claimed by the SSC. Same way, 80CCD is related to contribution to some pension scheme of the central government. So any contribution to the pension scheme of the central government is all specified in 80CCD. And anybody, whoever is the SSC, if employee's contribution is there and that person is a salaried individual, then only we can call it as an employee's contribution. In that case, the amount of deduction is restricted to 10% of his salary. If at all he is not an employed person, then the deduction is restricted to 20% of his salary, or sorry, gross total income, because he is not employed. So salary here is defined as basic and DA forming part of salary. That's all. So that is what salary here means. And for gross total income, it is a normal definition. So anybody who wants to claim a deduction under 80 1 can maximum contribute 10% of their salary or 20% of their gross total income, as the case may be. But this is the SSC's own contribution we are talking about. Of course, this is also subject to the maximum limit of 1,50,000. So once again, the limit under 80C and 80CCC and 80CCD1 is still 1,50,000 only. However, under 80CCD1B, there is an additional deduction of 50,000 rupees that is available under 80CCD1B, but that is not for all types of pension schemes. It has to be very clearly mentioned in the question, in the case that it is a national pension scheme or Atal Pension Yojana. So if these names are there, then we can talk about 80CCD1B. Otherwise, any pension scheme, no. We are talking about a notified pension scheme, which could be NPS, that is National Pension Scheme, and Atal Pension Yojana. In that case, additional 50,000 deduction is available, over and above 1,50,000. And same way, for the employer's contribution, also there is a deduction available if the employer contributes to either this National Pension Scheme or Atal Pension Yojana. The entire employer's contribution would be included first of all in the salary of the employee, but deduction will be restricted only to 14% of salary in case of government employees, if the employer is central government, and in case of other employees where the employer is not central government, deduction is restricted to 10% of salary. And this is also in addition to the 1,50,000 we are talking about. So that is the main point to be noted always, the restriction. The restriction has been mentioned in 80CCE, that is the section which restricts the maximum permissible deduction under all of these sections put together, 80C, 80CCC and 80CCD1. All these sections put together, the maximum amount of deduction permissible is 1,50,000. However, this is not applicable. This restriction is not applicable for deduction under section 80CCD2, which is related to employer's contribution, and also 80CCD1B, which gives an additional deduction of 50,000 rupees. That is all about various savings schemes and investment plans. Same way, under 80D, the medical insurance premium paid by the SSC for self, spouse or dependent children, or in case of HUF family member, otherwise than by way of cash. So the medical insurance premium has to be paid otherwise than by way of cash. So that is another restriction here, which means it has to be paid by check or other banking channels. So this medical insurance premium will be, of course, naturally expenditure for the SSC, and that will be eligible for deduction up to 25,000 rupees. Normal person, for medical insurance premium, deduction availability will be 25,000 rupees. In case whether the individual or his or her spouse is a senior citizen, then this 25,000 can be extended to 50,000 rupees. So that is the maximum amount of deduction that can be claimed for medical insurance premium paid on self, spouse and dependent children. Sorry. And of course here, if at all it is mentioned that the SSA has contributed to central government health scheme, that is also as good as medical insurance premium. So that is also eligible for 80D. That's what we should just remember. The central government health scheme, CGHS, that is called. That is first point. And another deduction, additional deduction is available if any premium is paid, once again otherwise than by way of cash, on the health of parents. If any medical insurance premium is paid on the health of the parents, whether or not dependent on the individual. So here parents need not be dependent on the individual. That is another point to be noted here. And irrespective of the fact, if any medical insurance premium is paid on the health of the parents, once again, if those parents are below 60 years then a deduction of 25,000. If the parents are 60 years or above, where we call them senior citizens, then the deduction will be 50,000. This is the total maximum deduction. Don't bring your own provisions per person and all that like that. Nothing like that. It is the overall deduction under section 80D. So 25,000 plus 50,000 possible combination. 50,000 plus 50,000 possible combination. 25,000 plus 25,000 possible combination. Like this. These are all various possible combinations. 50 plus 25 is not possible because the SSC himself cannot be more than 60 years and parents cannot be less than 60 years. So that is ridiculous. So if SSC and parents both are less than 60, then both can claim 25,000, 25,000. If the SSC is less than 60 years, then SC can claim SC or spouse. If they are less than 60 years, then SC can claim 25,000 and senior citizens, their parents can claim 50,000. That is a possible combination. Or if SC also and parents also, both are more than 60 years, then both can claim 50 plus 50, total 1 lakh. Maximum possible deduction under section 80D in all possible cases is 1 lakh, not more than that, but that does not mean automatically it will be coming. It definitely depends upon the age of the SSC and age of the parents against whose health the policy has been taken and premium has been paid. So that is one point to be noted. And one of the conditions for claiming deduction under 80D is that the medical insurance premium or CGHS contribution has to be paid by modes other than cash, right? So that is one more point to be noted here related to medical insurance premium. However, there is one special case here. In case where the SSC himself or spouse or the parents, whoever they are, if they are senior citizens and they were not being able to be covered by a medical insurance plan, but they are incurring medical expenditure, then they can claim a deduction of up to 50,000 rupees. Up to 50,000 rupees. Then, if it is not already covered by a health insurance plan, then a deduction of 50,000 rupees can be claimed for medical expenditure. Medical expenditure. Of course, the total amount of deduction cannot exceed 50,000 rupees. That is the maximum amount under medical expenditure. For medical insurance premium, there are possibilities. 25 plus 25, 25 plus 50. Maximums we are talking once again. If actual premium is different, we have to take accordingly. Maximum of 25 plus 25, maximum of 50 plus 50, maximum of 25 plus 50. These are all possibilities. But whereas for medical expenditure, there is only one possibility, that is a maximum amount of 50,000 rupees for the expenditure incurred on the senior citizen, whether that amount is related to the SSC himself or to the parents of the SSC. So that is one more point to be noted. And there is another deduction which is available up to 5,000 rupees for the preventive health checkup. So for the preventive health checkup of the SSC, if an amount is paid, up to 5,000 rupees can be claimed as deduction. But only point here is this can be paid in cash also. So this here there is no restriction. This can be paid in cash also. But what is the amount restricted here is maximum of 5,000. However, don't think that this is in addition to the 25,000 or 50,000 we already have. No, it is not in addition to that. It is already included in that. But only relief to the SSC is what? If at all he wants to pay in cash also, he can pay up to 5,000 rupees for preventive health checkup for himself or spouse or dependent children or parents. All of them put together, maximum amount of deduction for preventive health checkup is 5,000 only. In aggregate, that is. Subject to individual limits anyway are there, 25,000 or 50,000 as the case may be. That is about 80D. These are the important provisions related to the deductions under chapter 6A. 80D is about medical insurance premium and medical expenditure, what we discussed last time. Of course, there is a small variation to section 80D, that is called 80D 4A. If the premium is paid in lump sum, can that be allowed as deduction for more than 1 year in that case? So what happens? It will be appropriate fraction of the lump sum amount is what the deduction will be claimed. This is also a common point. Let us say in some cases, generally the medical insurance premium is given for 1 year. That is generally. Let us say somebody has paid 20,000 rupees for a period of 2 years as a medical insurance premium. For 2 years, if he has paid 20,000 rupees, how much reduction can be claimed in each year? Naturally, 10,000 rupees, like that. So, appropriate fraction of such lump sum amount will be given as deduction under 80D 2A, 4A, sorry. So, that is a separate thing, but don't need to worry about it. It is just common sense point. So, if at all the medical insurance premium given in the question is related to more than 1 year, take proportionate amount as deduction. That is the point. Other things are not required. So, what are the proportionate amounts we have to take? So, that is 80D and 80D4A. Now, let us look at the application of these provisions which are contained in illustration number 6 here. Mr. A, aged 40 years, so age is important for claiming deduction. His age is 40 years, paid medical insurance premium of 20,000 rupees during the previous year 1920 to ensure his health as well as the health of his spouse. 20,000 rupees he paid, which is absolutely okay. Why? Because it is less than 25,000. He also paid medical insurance premium of 47,000 rupees during the year to ensure the health of his father, aged 63 years. So he paid 20,000 rupees for himself and he paid 47,000 rupees for the health of his father, but both are medical insurance premiums. We are not talking expenditure, both are medical insurance premiums or health insurance premiums. So his father's age is 63 years, means definitely he is a senior citizen. He is not dependent on him. That doesn't matter. This is a deviation, distraction. Don't fall for it. Parents need not be dependent on the SSE. Whether or not they are dependent on the SSE, still the deduction is available under 80D. That is the first point. And another thing is, he has contributed 3,600 rupees to CGHS, that is Central Government Health Scheme, during the year. Also, he has incurred 3,000 rupees in cash on the preventive health checkup of himself and spouse, and 4,000 rupees also by check on the preventive health checkup of his father. See, as far as the preventive health checkup is concerned, it can be paid in cash or check. That is not a problem. So don't worry about the mode of payment. That doesn't matter. But what matters there is the limit that is their maximum amount. Total amount paid for preventive health checkup is how much to put together? That is 7,000. But how much is available for deduction is only up to 5,000. So that's what we have to observe while reading the question itself. Then compute the deduction available under 80D for the assessment year 2021 is the point. So look at the first point, that is 20,000, which is absolutely okay. There is no problem. But he said he contributed 3,600 to CGHS during the year. He said he contributed. He never said on whose life. So naturally, whose health, we have to assume it is on his health only. So total amount, if at all, we have to consider here 20 plus 3,600. 23,600 is related to total amount of medical insurance premium that he has paid, including CGHS. CGHS is also a kind of medical insurance only, but that is related to central government. That is 26,300. Then, sorry, 23,600. Sorry, 23,600 is the total amount, including CGHS. Plus he has paid 3,000 rupees for preventive health checkup of himself. That's what is mentioned here. So, and spouse, okay, both are same. So total amount what he has incurred for himself and spouse. Original 20,000, then 3,600, then 3,000. All three put together, it will be 26,600 rupees. Total he has incurred actually, whatever he has paid. But naturally that will be restricted to how much? That will be restricted to 25,000. 25,000 only. That's all. That is related to himself. So that is restricted to 25,000 only. So though he has paid 26,600, it will be restricted. The deduction will be restricted to 25,000 only. Where you will reduce it, that is your choice. That doesn't make any difference. Deduction is finally restricted to 25,000 only. That is a point to be noted. And one more point here is related to the parents. His father actually. Father is 63 years of age and 47,000 rupees has been paid as medical insurance premium towards the health of his father. And in addition to that, on his father, the SC has spent 4,000 rupees for preventive health checkup. So total actual amount spent is 51,000 rupees. That is the actual amount spent. 47,000 rupees on medical insurance premium, preventive health checkup 4,000. Again, we don't need to worry about the individual breakup. Finally, how much can be allowed as deduction? That only matters. How much can be allowed as deduction? Only 50,000 can be allowed as deduction here. So the combination is here the total deduction 20 plus 50, that combination. So the maximum deduction under this case under section 80D will be, that is 75,000 only. So here the point to be noted, the preventive health checkup, whatever we have restricted, in one of the places we have to restrict because both of them put together cannot exceed 5,000. There is a restriction there also. So that is why if this 20,000 is available, yes. 3,600 is available, yes. Out of this 3,000, the disallowed amount of 1,600 has been taken from this 3,000. And actually the amount which is allowed as deduction related to the preventive health checkup on the self was only 1,400. And remaining 3,000 is definitely allowed here because it is well within the 5,000 limit. So the point is, overall amount on the preventive health checkup cannot exceed 5,000 rupees put together for self as well as parents. Here the total amount is only 4,400 according to this breakup. So ultimately, which is less than 5,000, that is fine, that is okay. So we have to check that also, is it crossing 5,000? So that is the points to be noted here. So the total deduction is completely 75,000. That's all. That is illustration number 6. Now, look at illustration number 7. Mr. Y, once again, aged 40 years, paid a medical insurance premium of 22,000 during the previous year to ensure his health and as well as the health of his spouse and dependent children. That's all okay. And he paid medical insurance premium of 33,000 during the year to ensure the health of his mother, aged 67 years. So definitely senior citizen. Who is not dependent on him, doesn't matter. And he incurred medical expenditure of 20,000 rupees on his father. So he has two parents naturally, and he has spent how much on the mother? 33,000 rupees towards medical insurance premium, whereas medical expenditure has been spent on father, aged 71 years naturally, who is also a senior citizen and who is not covered under medical claim policy. Because he is not covered under medical claim policy, this 20,000 is incurred as not as medical insurance premium. Observe this carefully. This is medical expenditure of 20,000 rupees. This is medical expenditure. So that is given in the question. And his father is also not dependent upon him. Anyway, it doesn't matter. He contributed 6,000 rupees to CGHS. That is another point. 6,000 rupees towards central government health scheme. So that is there. When nothing is mentioned, against whose health he would have contributed? Self only. So totally he contributed 22,000 for himself and spouse and children, 6,000 for himself as CGHS. Total is 28,000. But 28,000 is restricted to 25,000 only. That only is the allowed deduction related to the medical insurance premium for self, spouse and dependent children and a contribution to CGHS. Put together it was 28. Though it was actually 28, amount of deduction available is only 25,000. Now coming to this one, main point to note, for the parents, So for the parents, senior citizens, both of them are here. This 33,000 is paid as medical insurance premium for mother. 20,000 is incurred as medical expenditure. For the parent who is not covered by medical insurance, expenditure is also part of 80D, no problem. But in spite of that, though he has paid 53,000, he cannot claim entire 53,000 as deduction. Again, the deduction is restricted to 50,000 only. So the medical expenditure deduction is only applicable for the parent who is not covered by the Mediclaim policy, that is the father in this case. However, put together for father and mother, what he has spent is 53,000. But overall deduction for senior citizen in any case cannot exceed 50,000. So 50,000 is once again the maximum amount of deduction. So which combination has worked out here? That is 25 plus 50 combination, which is 75,000 is the maximum amount of deduction under 80D. That is very important section. Definitely questions can be expected from 80D, whether in MCQs or even in the bigger question as a small point. Now let us quickly go through some of the small deductions. For example, 80DD. So if at all there is any expenditure incurred, including the medical treatment of a dependent disabled. This is easy to remember. DD, dependent disabled. So for a dependent disabled, 80DD gives a deduction. Of course, who is a resident in India and an individual or a HUF. For them only this deduction is available. For a resident individual, we can say normally. HUF, of course, is always here only. So a resident individual or a resident HUF, for them 80DD is possible. So what is the amount of expenditure that can be done? Whatever it is, actually, there is no problem. Don't worry about this much. Normally, what type of expenditure it is disabled dependent is there. First of all, the SC is having a dependent person who is disabled. So naturally, the SC might incur some medical expenditure, training, rehabilitation, etc., etc. Like that, you would have deposited with LIC or some other company as a scheme. Those things are all possible to be allowed as deduction. But all of them are actually not required to be looked at. And we don't need to really know what kind of diseases they have in the medical history: autism, cerebral palsy, multiple disabilities, blah blah blah. We don't need to worry about them. Disabled, that's all. What is disability? How much disability? Those are all not generally required. So if it is a dependent disabled person, if the SSC has, in case of severe disability, it is going to be 1,25,000. In case of severe disability, how do we know it is severe? If it is given in the question that the disability is 80% or more, then severe disability, that is a flat deduction. So deduction is standard direct amount of deduction. So that is not required or to relate with any expenditure. So here for a normal disability, which is less than 80% of disability, 75,000 will be the amount of deduction under 80D. Of course, the SC has to furnish all the certificates issued by respective medical authorities and all that. We don't need to really go through all those things. Simply, 80DD is related to dependent disabled, and amount of deduction that is available will be for a severely disabled person 1,25,000, for a not severely disabled person 75,000. For a severely disabled person means who has more than 80% of disability. And by the way, SSC is not the disabled person. You have to identify that. SSC himself is not disabled. SC is normal person, but his dependent, somebody, whoever is that dependent, they may be disabled. Then naturally the question comes, who is dependent here? There is a possibility of basic relations that the SC might have, like what? Spouse, children, parents, yes, brother or sister of the individual who is wholly or mainly dependent on such individual and not claimed deduction under ATU in computation of his income. So we have to refer to ATU also later, where same amount of deduction will be available, but where the SC himself will be disabled. For example, let us say the brother of the SC is disabled. Let us say, just for example, brother of the SC is disabled, and brother already claimed a deduction under ATU. Because he himself is disabled, he can claim deduction under ATU. So can the SSC also claim deduction once again under 80DD? No. That is why once a deduction is already claimed under 80U, it cannot be claimed once again under 80DD. That logic has to apply. But who are there here in the dependents category? That names you just have to generally remember. So spouse is naturally will be there, children will be naturally there, close knit family like parents are there, brother or sister. That's all. Don't say cousins and all. Brother or sister means own brother or own sister. Siblings we can call. Those are all what we can call them as relatives. For HUF, it is all, any member of HUF is automatically a dependent, we can say. But of course, every dependent is not disabled. But to claim deduction under 80D, the dependent has to be disabled. What kind of disability and all we don't need. But for the amount of deduction, we should definitely know whether he is more than 80% disabled or less than 80% disabled. If nothing is mentioned, you can take a assumption there. So normally you can take 1,25,000 as a standard deduction for 80DD. So that is one point here to be noted. And look at this illustration. Mr. X is a resident individual and he deposits a sum of 50,000 rupees with the Life Insurance Corporation every year for the maintenance of his handicapped grandfather. So here itself it is gone, because grandfather, is it there in the list of these people here? For an individual, is he there in the list of dependents? No. Even though he is dependent wholly upon the SSC, because the law did not include grandfather in the list, all the other things, blah blah blah. So a lot of stories given. What is the amount of deduction available under 80DD? Answer is nil, sir. No deduction will be available, so he will not be eligible for any kind of deduction. Why? Because grandfather is not included in the definition of dependent. So that's it. That is illustration number 8. Then what will be the deduction if Mr. X has made a deposit on the for the purpose of dependent father, and now the father is disabled here. So now understand this carefully. This is where the important point comes. How much amount he has deposited? 50,000 rupees he has deposited. So naturally you will say 50,000 rupees will be deduction. No. For 80DD, there is no need of looking at how much actually is deposited at all. So directly, I said already, it is a flat deduction, no other things. Directly, there can be a deduction of 75,000 or 1,25,000 as the case may be. How the case will be determined? According to whether his father is having severe disability or normal disability. In case of severe disability, 1,25,000. If the dependent father is having a severe disability. If the dependent father is having not so severe disability, then 75,000 will be the deduction amount. That's what you should write, and this can be type of MCQ question. So this is once again a misleading point. You have to be careful here. Why? Because the amount deposited does not matter here. This 75 and 1,25,000 are standard amounts, flat amounts, irrespective of actual expenditure. That we have to be very clear. That is 80DD. And another section now, 80DDB. 80DDB is about medical treatment. So once again, who is eligible as medical treatment will be done for human beings only. So definitely the SC will be individual, or a HUF is okay, because that will also have members who are human beings. But what he is doing? He is incurring some medical expenditure on himself or dependent. So if it is HUF, he is incurring some medical expenditure on any member of the HUF. Either way, he has incurred certain medical expenditure. That's all. On himself or any dependent. Once again, who is a dependent? Same definition. Who is a dependent? Same definition applies here. So what is the quantum of deduction here? So here look at this. This is not a standard deduction. This is not a flat deduction. 80DD was a flat deduction irrespective of the amount spent. DDB is not that. DDB is medical expenditure really incurred. So if at all the SSC has incurred, let us say 20,000 expenditure, then 20,000 only can be claimed as deduction. So here, how much amount of deduction will be available? Amount whatever is actually paid, or 40,000 rupees, whichever is lower. Naturally the law will be giving deductions whichever is lower only. So 40,000 rupees is the maximum amount of deduction that can be claimed. Under 80DD B. So under 80 DDB, certain medical expenditure, if at all it is incurred on himself or a dependent, then there is a deduction of maximum 40,000 rupees, maximum 40,000 rupees. That means actual expenditure incurred or 40,000 rupees, whichever is less. Now the question comes, sir, any medical treatment is okay? Just for cough and cold also medical treatment okay? No, sir, no. The medical treatment should be for such disease or ailment as may be prescribed. CBDT will give the list of them. We don't need to know the list. We don't need to see the list also. So it is not for all type of medical expenditure. Don't mix it with the 80D. In the 80D also there was medical expenditure allowed as reduction, but of course only for senior citizens, not for everybody. But that is different. That is a general medical expenditure. But here 80DDB medical expenditure is not for any type of disease. Particular diseases or particular type of problems or ailments only will get this deduction as specified by CBDT. What are those? We don't need to know. It has to be given in the question that it is a specified disease. If it is mentioned that it is a specified disease, it is a specified disease. What disease is that? How long SC is suffering from that disease? All these questions will not have any value. So we don't need to go into the investigation part of the SSCs or his dependents' health records. That is none of our business. Our point is he eligible for 80 DDB or not? Yes, if the expenditure is incurred towards the medical treatment of specified diseases, then how much is the reduction? Deduction will be 40,000 rupees or actual expenditure, whichever is lower. However, in case the patient is a senior citizen, the same 40,000 becomes 1 lakh rupees. So there is a additional amount of deduction that is given for senior citizens naturally. So normally 40,000 rupees, for senior citizens it is 1 lakh rupees. Once again here also same, amount actually paid or 1 lakh rupees, whichever is lower, that only will be allowed as deduction, even for senior citizens also. There is no flat deduction under 80 DDB, first point to note, and it is not available for all types of medical expenditure. It is available for certain medical treatments of certain specified diseases only. Amount of deduction is 40,000 rupees for a normal patient, 1 lakh rupees for a senior citizen. That's all. So that's what has been summarized here once again. A senior citizen maximum limit is 1 lakh. For a other than senior citizen, 40,000 is the maximum amount of deduction. Okay. Again, you don't need to worry about this neurologist, urologist, oncologist. We are not doctors. We don't need to know what those specialists are all meaning also. Practically that may all be useful for exam purposes. Those are all not required. So straight away understand who is eligible SSC, what is the eligible expenditure, how much amount is eligible for a deduction. That's all. That is enough. For any section, focus should be on how much amount of deduction can be claimed. And are there any special conditions that we have to check? If there are special conditions, yes, we will check them also. And those special conditions, if they are satisfied, then the deduction can be claimed by the SSC. Now, moving on to another deduction, that is 80E. This is also easy to remember. Here you can say E for education. E for education. Of course, it is not about expenditure on education. It is the interest on the loan taken for the purpose of education. And that to which education? Not school education and all. For higher education. That is allowed as deduction. That's all. There is no monetary limit that is prescribed here. So simply any interest that is paid or payable by the SSC in the previous year towards interest on the loan taken for the higher education of whom? Higher education of himself or definitely his or her relative. Then who is relative here? Naturally spouse and children of the individual, or the student for whom the individual is a legal guardian. Then also that can be called as a relative. Simply spouse or children also are included in this as a relative. So if SSC is taking any loan for the purpose of higher education of the spouse or children, and he has taken loan is not an income, loan is not taxable, we don't have to treat loan at all. But now what he's doing after taking a education loan from the banks, now he's paying interest. Interest is an expenditure. Question is it allowed as deduction here? Yes. That's what 80E gives, a deduction for interest paid on loan taken for higher education. Then naturally question comes, sir, what is higher education? So let us not go into all these details. Usually, any interest paid on the loan taken for pursuing any course after plus 2 or equivalent will qualify for deduction. So that is higher education. So up to plus 2, we may call it secondary education, and beyond that it can be called as higher education. So all the other details you don't need to know. For example, graduation, is it higher education? Yes. Any course which is pursued after class 12th is higher education, simple. And the deduction is available when it is available. Whenever the SSE starts paying the loan, when the SSE starts paying the loan, look at this here, in respect of the initial assessment year in which the SSE starts paying the loan. So he started paying the loan, and after that year, 7 assessment years like that, he can claim this deduction. Of course, each year he is paying interest, then only he can claim deduction. Just like that, automatically 7 years he will not claim deduction. So total how many years? Whenever he starts paying the loan, that year, starting from that, 7 more years, the SC can claim deduction. Total 8 years, the SC can claim deduction for interest paid on loan taken for higher education. Or let us say if the interest is paid in full and the loan is paid off within 4 years only, that's all, then the period is also restricted to 4 years. So when we say 8 years, this is maximum, and this 8 years is inclusive of the year in which the SSE starts paying the interest on the loan. Whenever he starts paying the interest on the loan, from that year onwards, 7 more years added to that, this reduction will be available. So that number has to be definitely remembered. Charitable institution and all this, financial institution, we don't need to know the details of them. Simply banks provide loans like that. So that is, banks are the financial institutions. Now look at illustration once again here, where Mr. B has taken 3 educational loans on April 1st only, this year only he has taken, and that is given as 3 different columns. So loan 1, loan 2 and loan 3. So loan 1 is taken for whom? For himself. For himself. Whereas loan 2 is taken for whom? For son of B. So that is SSE's son. And loan 3 is taken for the daughter of SSE. So these are 3 loans are taken. Purpose of the loan is SC himself wants to do MBA, and his son wants to do BSc, his daughter wants to do BA. That is a fact. No need to worry about their academic choices. Amount of loan is not required because that is just amount, unless there is a percentage given on which, because on the amount of loan you have to use percentage if it is given, that is not given. But annual repayment of loan is given. Repayment of loan is also not what we are interested in. What we are interested in basically is the annual repayment of interest. So we are interested in interest here. Interest here it is given very clearly, that is 20,000 rupees for loan 1, 10,000 rupees for loan 2, and 18,000 rupees for loan 3. Total 30 plus 18, 48,000 rupees is the total amount of interest that the SSE has paid during the previous year. Is it eligible? Of course, yes. Entire amount 48,000 will be eligible. There is no monetary limit here, by the way. No amount is restricted here. Only point is the loan should have been taken for the purpose of education of self, spouse or children of the SSE. And that is satisfied here. And the loan should be taken for higher education. That is satisfied here. MBA, BSc, BA, all are higher education. So total deduction under 80 will be 48,000. That's all. That is related to interest on loan for higher education. Now, there is one more deduction here related to interest on loan borrowed for acquisition or construction of a house property by an individual. So here is one more important point to note, 80EE. That is also an important deduction. First and foremost point to note is here, what is the amount of expenditure that the SC is incurring? That is the interest on the loan, of course, that is all same. But why the loan is borrowed? 80E was education. 80EE was what? For the acquisition of a house property. So that is a point to be noted here. What kind of house property? Only a residential house property. So if an individual has taken a loan for the acquisition of a residential house property, then interest payable on such loan would qualify for a deduction under this section. That is the eligibility of deduction under 80EE. That is interest on loan borrowed for acquisition of house property. But look at the conditions here. So many conditions are there. You have to check them in the questions. First of all, the value of the house should be less than or equal to 50 lakhs, means it should not exceed 50 lakhs. Second, the SSE should not own any residential house on the date of sanction of loan. If he already has a house, this second house, whatever he is purchasing, will not be eligible there. Third, the loan sanction should be less than or equal to 35 lakhs. So you have to remember all these conditions. These are not useful for calculation, but they are conditions. Value of the house should be less than 50 lakhs. Loan sanction should be less than 35 lakhs. And look at this condition. The loan should be sanctioned during the previous year 16-17 only. Only 1 year, that's all. So after that, this deduction is not available. But of course, you may say, why is it relevant for us? SSE may pay interest during our previous year 19-20 for a loan which would have been sanctioned during 16-17, right? Then he will be eligible for this deduction, provided value of the house is less than 50 lakhs, amount of loan is less than 35 lakhs, and SC does not own any more residential house other than this one which is purchased now. So it should be his first house, we can say. Like that. With these conditions satisfied, interest on loan taken, interest on amount borrowed for the purpose of construction or acquisition of a residential house property will be allowed as deduction. So that is the deduction under 80EE. And point to be noted here, main point is, what is the amount of deduction? This is the amount of deduction 50,000 rupees. And very important point to be noted is, this is in addition to the 2 lakhs rupees that was already available under section 24 under the income from house property. The nature is same, right? Nature is what? Interest on amount borrowed. Of course, under section 24 there are no conditions like it should be residential house property, nothing like that. Any house property can claim section 24. But here under 80E there are conditions. So for example, there is a residential house property following all the conditions under 80E. Can the SC claim 24 also and 80E also? Answer is yes, because this 50,000 is over and above the deduction that is available under section 24 of 2 lakhs rupees. That is another point to be noted very well. So that is we know that 2 lakhs rupees restriction for the amount borrowed for the acquisition of a self-acquired property. So this deduction, simply speaking, has nothing to do with section 24 deduction. That's what we should remember. So amount of deduction is 50,000. So very clear conditions are there. House value should not exceed 50 lakhs. Loan amount should not exceed 35 lakhs. Loan should be given during the previous year 2016-17 only. Need to remember this year. If he says that loan is granted during the previous year, we just don't have to worry about it, because 80E is not available. It is available only if the loan is sanctioned during 2016-17. And SC should not own any other house property other than this, and this house property should be a residential house property. If all these conditions are satisfied, then a deduction of 50,000 rupees is available under section 80EE to the SSE. Of course, this is over and above the section 24B deduction of 2 lakhs, which is there for self-occupied property under the head of income from house property, right? So that is section 80EE. Now let us just apply this section in illustration number 11. Mr. A purchased a residential house property, residential, so that condition is satisfied, for self-occupation, okay, fine, at a cost of 45 lakhs rupees, which is less than 50 lakhs, that looks good, on 1/4/2017, that doesn't matter, for which he took a housing loan of 35 lakhs. 35 lakhs is okay. Up to 35 lakhs it is okay. Beyond 35 lakhs is not okay. So that is why 35 lakhs is still eligible for 80EE. The condition is not violated here. So loan amount did not exceed 35 lakhs from Bank of India at a rate of 11% per annum on the same date, that is 1/4/2017. On the same date, 1/4/2017. So which year the loan has been taken? Loan was sanctioned, but it is given here very clearly. The loan was sanctioned on 28th of March 2017. So this is also an important condition because the loan is sanctioned in the year 2016-17. It has to be between in the year 16-17 only. That condition is also satisfied. Compute the eligible deduction in respect of interest on housing loan for the assessment year 2021 under the provisions of the Act, assuming that the entire loan was outstanding as on 31st March 2020, as it does not own any other property also, and it is a self-occupied property. But he is not asking about 80EE. He is asking particularly what is the amount eligible for deduction in respect of interest on housing loan. That's all he is asking. So we need to definitely calculate 24B also. We cannot just restrict to 80EE. Both we have to calculate. So under 24B, how much will be the interest? First calculate that. So amount of loan is 35 lakhs. Entire amount is outstanding. 11% on 35 lakhs. Calculate 11% on 35 lakhs. How much will be that? 3 lakhs 85,000. That is the amount of interest that he would have paid actually, but doesn't matter because for a self-occupied property, the maximum amount of interest that can be claimed as deduction under 24B is restricted to 2 lakhs. That's it. Now, here, how much is the amount of deduction under 80E? That also has to be found out. So, the amount of interest paid is 3,85,000. Deduction already claimed is 2 lakhs. So, this is remaining 1,85,000. But again, that cannot be claimed because the deduction under 80EE is restricted to only 50,000 rupees. And this 50,000 rupees is over and above this 2 lakhs. So, total amount of deduction that the SSC can claim towards interest on the loan taken for construction of a house here is 2,50,000. That is the answer. That's it. That is about interest on the loan taken for construction or acquisition of a residential house property under 80EE. 80E is also interest, but that was interest on loan taken for education. Here 80EE is for interest on loan borrowed for acquisition of a residential house property by an individual. So that was already there. Now it has been extended for others in relation to this section 80EEA. So what are the conditions here? Now once again, same thing. Stamp duty value of the house should not be more than 45 lakhs. Earlier it was should not be 50 lakhs. Now there it was used value. Here it is used stamp duty value. So the simple point is 80EE has lost its relevance, right? So when 80EE has lost its relevance, automatically for new house purchases, nobody can claim deduction. That will not be fair. That is why 80EEA has been introduced. So conditions only, just these conditions you have to look at. First of all, the SC should not claim deduction under 80EE. Should not be there. Then only this is applicable. But here the stamp duty value of the house should not exceed 45 lakhs. It should be less than or equal to 45 lakhs. And SC should not own any other residential house on the date of sanction of loan. Then main point here is the loan should be sanctioned during our previous year, that is 2019-20. Now look at the quantum of deduction. This benefit will be applicable starting from assessment 2021, that is our assessment year naturally, because the loan should be taken during 2019-20. How much is the amount of deduction? That's what we should identify. So earlier under 80EE, the deduction was only 50,000. Now it is 1,50,000 under 80EEA, naturally to encourage people to buy new homes, that to low cost housing, because we're talking about a stamp duty value of the house should be less than 45 lakhs. This is where a tax benefit is definitely coming to the SSE in the form of 80EEA up to an amount of 1,50,000, and naturally this is also over and above. This is also over and above the 2 lakhs that was available for self-occupied property under 24B. So that is different. This is different. So if at all there is any interest payable in respect of acquisition of eligible property is more than 2 lakhs, then the excess can be claimed as deduction under 80EEA subject to fulfillment of conditions and subject to 1,50,000. Just for understanding purposes, let us say an SSE has paid an interest of 3 lakhs rupees towards loan taken, interest on loan taken for the purpose of construction of a house, residential house. Already he has claimed 2 lakhs, let us say, under 24B. So how much he can claim further now under 80 EEA? He can claim only remaining 1 lakh. He cannot claim 1,50,000. So the excess amount of interest that is paid over and above this 2 lakhs can be claimed here as deduction for an amount of 1,50,000 rupees under section 80 EEA. So this is over and above the amount restricted in the income from house property head, that is 2 lakhs. Over and above that, this 1,50,000 rupees deduction under 80 EEA will be available. So that is a point here to be noted. And by the way, the SC is having no other house property other than this. So naturally, the SC is considered to be self-occupying this house. But the loan should have been sanctioned during 2019-20. Stamp duty value of the house should not exceed 45 lakhs. And he should not be eligible for 80. Anyway, he will not be eligible. If loan is sanctioned during 19-20, how can it be sanctioned during 16-17? So E was available only if the loan was sanctioned 16-17. So what happens about those people who got loans between 17-18 and 18-19? Nothing happens. They are not eligible for deduction. That's it. When the law gives them deduction, then only there is an eligibility for deduction. So 80 EEA gives deduction for interest on the amount borrowed from a financial company or a financial institution or a housing finance company for the purpose of acquisition of a residential house property. Once again, these are all for residential house property. And another encouragement is given under 80 EEB. EEB, these are given for interest payable on loan taken for purchase of electric vehicles. Naturally, to promote electric vehicles and reduce pollution, reduce the use of diesel and petrol vehicles, this reduction is given. And what are the conditions to be satisfied? Naturally, the SC should be an individual. Companies buying electric vehicles, they are not eligible for this. Individual SC only will be eligible. Loan taken should be for the purpose of purchase of an electric vehicle. And naturally, the loan should be sanctioned by a financial institution. That is okay. But main point is, loan should be sanctioned between the period 1/4/2019 to 31st March 2023, which is still there. So during our previous year, if the loan is sanctioned, then definitely this deduction is available. By the way, these are all latest amendments. These are new changes in the previous year 1920. So definite questions can be asked from these 80 EEA and 80 EEB. So be careful about these two things. Both of them are fresh sections. In the insured material, wherever there are italic font, wherever there is italic font, you can understand that those are amendments and those are fresh sections. So definitely possible questions can be expected from this. And how much of interest can be claimed as reduction under 80 EEB here? That is 1,50,000 rupees. That's it. Now, normally for us, during the previous year, if the SC takes the loan and he pays an interest on that loan, and why he took the loan is for purchase of electric vehicles, then he can claim a deduction of up to maximum of 1,50,000 rupees. Of course, he cannot claim any other deduction under other provisions of the Act for the same year or any other assessment year. So once he claims here as deduction, he cannot claim it as an expenditure also somewhere else. That is not correct. He will have to be claiming either as an expenditure in some other place or as a benefit that he has got from the government in the form of 80 EEB for this purpose of payment of interest towards loan taken for the purchase of electric vehicles. So amount of deduction you should remember, that is 1,50,000 rupees. That's it. That is about 80 EE, 80 EEA and 80 EEB. All E series is all about interest. E was only education. EE was housing loan, but only loan sanctioned between 16-17. EEA was also housing loan, but only loan sanctioned during the previous year 1920. EEB was loan for purchase of electric vehicles. And in all these cases, what is allowed as deduction is not loan. What is allowed as reduction is interest. Be clear on that. Interest as an expenditure is allowed as reduction here. So that will be given. As far as ATE is concerned, there was no limit. ATEE had a limit of 50,000. ATEEA and EEB, both of them have 1,50,000 as limit. Conditions definitely apply, no doubt about it. Now, look at this different cases. This question can very well be expected. As I said, these are quite possible to be asked this question. Why? Since this is a new section, ATEEA particularly and EEB are new sections, this question is quite possible in the examination. Illustration number 12. Practice this very well and don't get surprised if you see it in the examination in a little different form. So always quite possible. Such type of things, whenever there are amendments and new things, questions will definitely appear from those areas. So practice this illustration number 12 very well. Look at different cases here. There are 4 SSEs, Mr. A, Mr. B and Mr. C and Mr. D. All are individuals. Amount of loan taken is given 43, 45, 20 and 15 lakhs. Loan taken from Housing Finance Corporation, deposit taking NBFC somebody, loan deposit taking NBFC and public sector bank. So those are financial institutions. Date of sanction of loan. For all of them, for these 3, it was 1/4/2019 during the previous year. For Mr. D, the loan was sanctioned on 30th March 2019. So the point is, definitely ATEEB will not be available. Why? Because the loan should have been taken between 1/4/2019 to 31st March 2023. So D automatically is not going to be eligible for deduction under ATEEB. That is visible. Whereas others are okay. Date of disbursement of loan is useless information. That is not required. We don't have to look at it. Purpose of the loan. First one, A took loan for acquisition of residential house property for self-occupation. B also took loan for acquisition of residential house property for self-occupation. And C took a loan for purchase of electric vehicle for personal use. So that is the details given. And stamp duty value of the house property is given as for A 45 lakhs and for B 48 lakhs. Once again gone. Why? Because the loan is taken during 1/4/2019 to 31st March 2020 during our previous year 1920. That's okay. But the stamp duty valuation of the property has exceeded 45 lakhs. So D is already eliminated. B is also already eliminated from the eligibility of deduction under AT, EEA and EEB. Then cost of the electric vehicle is only useful for computation of interest. There is no restriction on that. And rate of interest is given. So we don't need to worry about these 2 people. These 2 are not eligible for any deduction. So these 2 things are not required, both of them. But other 2 we have to calculate. So what is this? Stamp duty value is 45 lakhs. And what was the amount of loan here? That is important. 43 lakhs, same amount. And 43 lakhs into 9%. So that has to be calculated. But when the loan has been disbursed, interest will be calculated from the date of disbursement of loan, right? That happened on 1/5/2019. That means interest should be calculated for a period of 11 months only. So do this calculation separately on calculator. 43 lakhs into 9% into 11 by 12. 9% into 11 by 12. So that is 3,54,750. That is a total interest. Definitely that is going to be paid by Mr. A to whichever financial institution he has taken the loan from. But under 24B, amount is restricted to 2 lakhs. How much amount is still there which can be claimed as reduction? That is 1,54,750. But that also cannot be claimed. That is restricted to 1,50,000 under ATEEA. So for Mr. A, what is the total amount of deduction that he can claim, irrespective of under which section he is claiming? He is going to claim a total deduction under 24B 2 lakhs, under ATEEA 1,50,000. Benefit, overall benefit for this SSE is going to be 3,50,000. So that is what first case, that is A, is concerned. So first calculation of interest, then deductions under which section are available has to be indicated. That is Mr. A. Mr. B. Mr. B eligibility is nil under 80 EEA. But of course, is he eligible for normal 24B? Yes, of course. That is okay. That is also how much? Up to maximum of 2 lakhs only. So B is eligible for 24B. There are no restriction on stamp duty valuation and all. But he is not eligible for 80 EEA. That is Mr. B. What about Mr. C? Mr. C can take deduction under 80 EEB. Look at the cost of the electric vehicle. How much was the cost of the electric vehicle, or the amount of loan actually? That is more important. Cost is 22 lakhs, but loan was only 20 lakhs. Disbursed on 1/5/2019. So calculate interest on that loan. 20 lakhs into 10% into 11 by 12. 20 lakhs into 10% into 11 by 12. If you calculate that, that comes to 1,83,333. Of course, naturally that has to be also restricted to 1,50,000 under 80 EEB. So these are important sections, 80 EEA and EEB. So Mr. C is eligible for a deduction only here. There is no other deduction under any section like 24B here. Whereas for A and B, there was another deduction under 24B also. Deduction available for Mr. A under 80 EEA also. For B, 80 EEA was not available, but only 24B was available up to 2 lakhs. C has a possibility of getting a deduction of only 1,50,000, and as we already observed, D cannot get any deductions. For D, no deduction is possible. Why? Because the loan is not sanctioned during 1920. It was sanctioned on 30th of March 2019, prior to 1/4/2019. So definitely no deduction for Mr. D. That's all. These are some of the deductions under chapter 6A. After we already discussed some of the investment based, savings based deductions. Each of them you should write well. As I said already, you have to write the section number and what does it indicate. Key points you should write, and you should remember those key points. Most importantly, the amount of deduction has to be definitely remembered. If there are any other conditions, special conditions, they have to be also remembered and written. So one by one, section by section, in the sequence, if you remember, that becomes easier for you. So all the sections you have to particularly remember. So we have 80C starting from that, and then 80CCC was there, 80CCD was there. Within that 80CCD1, 80CCD1B and 80CCD2 was there. So after 80CC series, 80CCE gives us the restriction of 1,50,000. Then we have 80D, that is medical insurance premium or medical expenditure. Then we have 80DD, dependent disabled, like that. 80DDB is also there, that is for expenditure for medical expenditure on self or old person, senior citizen. Like this, deductions continue with a series of alphabets. So whatever the deductions that we have discussed so far, every time what you should ideally do is you should go to the final summary in this chapter and you should be able to write all of them. As we discussed these things already, 80DD, and you can write this summary itself, that is enough. 80DDB, that is also for medical treatment of specified diseases, and 80E is for interest on loan for higher education. We have 80E for interest on loan borrowed for residential property purchase or acquisition. 80EEA also is same as 80EE, but only thing is the loan sanctioning date is different and the amount of deduction is also different. Conditions are also different. So 80EE conditions are different. 80EEA conditions are different. 80EE conditions are these. These are different conditions. They are not same here. So when we have 80EE conditions, these are the conditions. Whereas 80EEA conditions are different. Here, the stamp value should be less than 45 lakhs. Like this, for each section, each provision, each deduction, there are certain conditions you should remember. And most importantly, you should remember the amount of deduction also. And who is the eligible SSC also you should remember. But if you observe, almost all the cases we talked about so far, individual. So almost all the types of deductions so far we have discussed are 80 possible to be claimed only by individuals. So that is why they become more important for us, because naturally in our final examination, when the main question, computation of total income of the SC, will be given, our focus will be definitely on the individuals. So all these deductions will be very much helpful in the computation of total income. After calculating the gross total income of the SSC, this deductions under chapter 6a will be given, so that we can find out the total income of the SSC. If the question asks, we can apply the tax rates, which we already know, and we can identify how much is the tax payable by the SSC. That's okay. So that is how the overall process runs, and for that purpose, each of these sections has to be very specifically remembered. If you summarize all of them, it will be very short. Only thing is, more details are given in the essay material. You don't need all of that. Just summarize core points in any provision that just comes in a small table of maximum 2-3 pages. That will be useful for your revision. That should be used for your revision also. For that purpose, you need to write on paper first. So each of these deductions, write down very clearly what is the section number, who is eligible SSC, how much is the amount of deduction, what is the action that SC has to do, whether he should invest, he should spend something, he should pay something, what is that, deduction is available for what, and how much deduction is available, any additional conditions are there. That's all. These are the only points you have to note for each of these sections, all of them in one place. Finally, will not take much time to revise. That is the perfect way for going ahead with this chapter's preparation and practice. Fine. With that, we can conclude today's session. In the next session, we will continue with some more deductions, particularly 80G, which is a little bigger type of deduction, having deduction for donations and all. We'll discuss that one, and some more other deductions also. We'll continue the discussion on chapter 6A deductions in the next class. Till that time, take care. Bye bye. Thank you very much.